Today, folks, as we do here on Fridays, we are going to be diving down into my $242,000 dividend stock portfolio, which after this rocky roller coaster year we have been on, it is trading up over $100,000 with an annual income of around $8,550. We are going to go over the stocks I sold, the stocks I bought. I'm going to break down how much dividends I have actually received after taxes said and done for the year end, as I've received all my dividends for 2020, and this is going to be an incredibly exciting video. So in the clarity of my transparency, do the channel a favor, smash that like button, and let's jump right into this. Welcome back, passive income investors alike. Now, before we dive down into kind of like the holdings, what I bought, what I sold, my individual accounts, let's talk about the juiciest part of this portfolio, of course, being the dividends, as I try and continue fast tracking my financial independence so one day I can retire early, which is the whole point of this YouTube channel. Let's just see where we currently sit. In my combined portfolio overview, I am receiving about $8,550 annually, but a lot of this hasn't kind of baked in just yet because I am having some companies like RioCan doing dividend cuts, which will actually slice that down by about $500, which is a little bit painful, but I do, however, track my dividends month over month, at which we're going to go through this just really quick. I got a little bar chart that I'm throwing up here for you guys so you can see the actualized income. But in total for 2020, guys, my dividend income has been $6,443 after taxes. Throwing up this little bar chart here just to show you guys kind of the growth over time. I have to say, absolutely beautiful stuff to be making over $500 a month after tax. I mean, think about all the stuff you could do with an extra $500 a month. This is some beautiful stuff. I am way more excited for 2021 after all the BS we just experienced here, guys. I am excited to continue to take profits off my high flyers so I can continue scaling up this dividend income to see if I can reach my goal of $1,000 a month in dividend income by the end of next year. And just taking a look, moving into 2021, the only confirmed dividends I currently have coming in are going to be off MO. I got some coming off BNS here, Canadian Imperial Bank, TD, BTI, and we still got to wait for RioCan to confirm its dividend, which, by the way, after the January dividend, that is when we're going to experience the massive cut that's going to slaughter my overall annual income from $8,500 to about $8,000. But again, as I scale down positions, it's going to be cushioning the blow a lot here, because if you remember my last week's update, guys, I was only sitting around $8,000 in income. So how have I managed to get this up so much, like almost by $500 over the last week? Well, obviously by selling some of my positions off and just taking a look at where one of my biggest movements have been, which actually just happened today, guys, was in my RR to the S to the P, my registered retirement savings plan, where I sold down another 5 shares of Tesla. A lot of people are so overzealous about Tesla, but it's all based on future speculation. So to me, when I look at Tesla's growth rate being around 25% on revenue and the stock is growing at 800%, I just feel a lot more comfortable selling it, scaling the position down, just getting it to a point where if it drops 50%, my accounts will barely feel it. But if a lot of you Wall Street bettors out there that still think Tesla's running to like $1,000 a share again, I'll still be able to capitalize on a lot of that upside as well. But we can currently see I got about 10 shares of Tesla left, still worth $6,600, at which I took that money and converted it into Kimberly-Clark. A lot of you have been aware that I've been highly focused on the consumer staples sector, you know, by selling Tesla to buy into things like J&J, Pepsi, and now Kimberly-Clark, which, just taking a look on trackyourdividends.com here, guys, I love this little analytical tools. I pulled this up before to show you guys, you know, the PE ratio of Kimberly-Clark in comparison to some of its peers like Coca-Cola, Procter & Gamble, and I can also just take a look at like the dividend history, which seems to actually have been slowing down a little bit more in recent years on the growth side of things, but I still absolutely love this company, and I'm really glad that I've been able to get it to scale here, because now it's currently worth about $6,300. I'm down about 1.5%, but my average cost is right around $137. Now, by the way, I'm just going to throw this out here because I've been using trackyourdividends.com for quite a while now, guys, and if you are a dividend-focused investor, I absolutely love this thing because I can turn on the alerts, and it actually tells me when I'm going to be getting my dividend income, and it's just super helpful because I'm managing like 4 brokerage accounts in multiple different currencies, so I can kind of bring it all into this one place, and it all converts it to CAD for me very nicely. And on top of that, guys, it's pretty much free for the basic portfolio tracker, but if you want the analytical tools, you do have to pay for it. I'm going to leave the link in the description below if you want to support this channel. Help me out, guys, but again, you do not have to buy the paid version. If you want the basic portfolio tracker, it is completely 100% free. Putting that aside, I have done some more stock purchases this week other than just selling Tesla and obviously buying Kimberly-Clark. I went ahead and continued to add to my banking positions here in my Royal Bank account with TD, at which I've currently only added, I can't remember the exact share amount, but I've added it up to about 50 shares now at an average cost basis of around $67.90. I've been kind of annoyed because the banks have just been running too aggressively and we're starting to see a pullback, which, by the way, going into the beginning of every year, typically the markets tend to cool off. So I'm crossing my fingers that's what we're going to see happen as I try and scale down something like my MindMed position here, guys. But before we do a quick overview of the entire account positions and my current weightings, guys, just taking a look at my TFSA, I mean, all of these accounts have been super explosive growth right now, primarily due to the recovery plays. Again, RioCan recovering nicely, BNS, all my Canadian banks. I got MindMed in this account on my US side, which, by the way, there's nothing more beautiful than buying a stock for $800, which is all dividends, by the way. I completely bought this MindMed position with dividends, and now it is currently worth $5,000, up 527%. That is how you use dividend income to put into some higher risk plays, and in a circumstance like this, it worked out beautifully well. But on the other spectrum of it, just to talk briefly, guys, when we got to talk about credit, I'm going to make a whole separate video about this because I can't get over again how lucky I was, the fact that I paid my credit off the day that RioCan announced this dividend cut, which isn't coming up again until I think February's dividend. But in these moments, guys, I told you I was going to scale down my RioCan, and honestly, I just can't do it right now. I kind of lied, guys, and I'm sorry because I just can't get rid of it here. I mean, I spent so long, got so attached to the company, and now that they cut their dividend, it's even more resilient than it's ever been, and it's still arguably the best Canadian REIT in my humble opinion here. So instead of selling it, I'm really glad that I've been able to do what I told you guys I'd like doing, which is adding capital to the portfolio, and hopefully my growth position scaling enough to bring down the overall weighting of how much money I had in RioCan, which we might as well at this point take a quick peek at the overview, which again, I'm going to throw up on the side here for you guys. Just the entire bars and the current position weightings. Now with my cash position, I'm currently sitting right around $250,000, literally right at that 250K mark. So we are well ahead of schedule here. And again, primarily thanks to Tesla and MindMed, which MindMed is now making up about 15% of the overall weighted portfolio, which I have not taken any profits on yet. And I really don't plan to, at least until we start seeing the NASDAQ listing, which I don't know if it's going to happen this month or next month, but either way, I'm very comfortable holding here. As my MindMed position is currently worth around $37,000, some pretty staggering stuff from a $5,000 investment here, guys, but it has brought my RioCan weighting down because RioCan, you might recall, was my largest position, but now it's scaled it down to about 11% from where it was at 14%, which is also making me feel a lot comfortable about my other largest holding being Northland Power, which I told you guys I was a little sketched about because it's also run a lot and it was making up about 11% of my portfolio, but now only down to about 9%. Now, everything in general, I've never, again, I say this a lot, but I'm extremely happy with where my overall portfolio sits. I'm hoping we see a continued pullback in the market so I can start adding into the sectors that I've been telling you guys I'm very attracted by when we're talking about REITs still, Unilever. I've even been looking into things like McDonald's, a lot more consumer staple brands have, you know, a lower starting yield, but a higher dividend growth rate. And the reason that I'm kind of expanding my horizons right now and looking into, I'm trying to make a list of about 4 or 5 companies, because when I do decide to scale down MindMed, I mean, that's going to give me a lot of gunpowder to basically figure out what I got to do with it all. And I'm not just going to throw it all into one stock, but I'm going to pass the question off to you guys. What stocks should I be looking at? I got a few REITs with Stag along with a healthcare REIT I talked about. I'm also looking into Unilever, McDonald's, got a nice little list. I might even continue adding to TD with some of the profits I take off MindMed. Not 100% certain just yet. And just to keep this video really simple, I'm going to kind of leave it here, but I'm very excited because I want to break down for you guys how much I've been making off sponsors, off YouTube, off websites. There's a lot of exciting stuff going on right now, so consider subscribing because I'm going to start making those videos going into next week. But in light of all of this, again, if you want to support the channel, trackyourdividends.com, link in the description below. But again, stay cool, stay awesome, and I look forward to catching you guys tomorrow.